Welcome back to the Deep Dive. Today, we are diving deep again into the latest currents shaping payments and fintech.
Yeah, lots to cover.
We're pulling insights from the BayPay Forum Weekly News, specifically episode 28, covering June 2nd to 6th, 2025.
Right.
Our mission, as always, is to cut through the noise, get to the key takeaways, and maybe find some, surprising bits in there.
It was definitely a packed week. From big picture industry shifts to sovereignty debates, right down to very specific tech innovations. Cards, crypto, AI, the works.
Absolutely. And just quickly, this deep dive is brought to you by Paycademy, helping you navigate and succeed in this fast-moving payments world.
Good stuff.
Okay, let's kick off with the big picture. There's a new report out, the third global fintech report from Boston Consulting Group and QED Investors. And it's got some, headline-grabbing stuff about the state of fintech.
Yeah, the main takeaway. Profitability. It looks like fintechs are really entering a new stage.
Profitability, finally.
Yeah, it seems like it. After years of that growth at all costs mantra, there's a clear shift. Revenue growth actually picked up 21% year on year, up from 13%.
Okay, faster growth.
But crucially, EBITDA margins jumped 25%.
So not just top-line growth, but they're actually getting more efficient, more financially sound.
Exactly. And the numbers really back this up. 69% of public fintechs are profitable now.
69%. That's up from less than half last year, wasn't it?
Yeah, a huge jump. And this is happening even as, funding and valuations have sort of stabilized. It suggests the core businesses are just getting stronger.
Feels like the sector's maturing, really finding its feet financially, but the report still sees huge potential, right? Like they haven't conquered the world yet.
Oh, definitely not.
Okay.
They've only penetrated about 3% of the total global banking and insurance revenue pool.
Only 3%.
So massive room to grow. And importantly, they're still growing about 3 times faster than the traditional incumbents.
3 times faster. Okay, that disruptive element is definitely still there. But who's actually capturing this value? Is it widespread?
Not really, according to this report. It seems about 60% of all that fintech revenue comes from fewer than 100 big players, these scaled players.
Wow, so it's quite concentrated.
Yeah, it suggests that while the whole industry is getting healthier, it's the big established fintechs grabbing most of the gains right now.
Interesting. Did they break it down by vertical, like which areas are biggest?
They did. Payments is still king, $126 billion in revenue there.
Right.
Then challenger banks at $27 billion, crypto trading $16 billion, and BNPL providers around $8 billion. Payments is clearly the engine.
Okay, that sets the scene globally. Now let's zoom into Europe. There's this ongoing discussion about payment sovereignty. The European Card Payment Association, EPCA, put out a white paper.
Yeah, this is a really hot topic in Europe. It comes down to the dominance of global players. Visa and MasterCard handle something like 65% of card payments in the euro area.
65%.
Plus, you've got the big U.S. tech giants, Apple, Google, PayPal, playing a bigger and bigger role.
And the worry is that creates a dependency, a risk.
That's exactly the EPCA's point. They're saying relying so heavily on non-European systems is a vulnerability, and Europe urgently needs to protect its sovereignty over payments infrastructure. It's tied to economic independence.
So what are they actually suggesting? What needs to happen?
Well, they're recommending things like promoting open European standards, creating a more level playing field for the European card schemes, the ECSs versus the global giants, better infrastructure sharing, and more cross-border cooperation between the domestic European schemes.
Sounds like support for things like EPI and Wero, those European initiatives.
It definitely aligns with that thinking.
Right.
You hear figures like the head of the ECB stressing the need for Europe to build its own capabilities, reduce that reliance. They see sovereignty and economic autonomy as directly linked.
Okay, let's switch gears to funding. Where's the money flowing? Seems like there was some interesting news this week.
Yeah, still plenty of investor appetite, especially for those more established names.
Yeah.
UK fintech Tide, for example, is reportedly close to a funding deal that could make it a unicorn.
Over $1 billion.
That's the talk. They've grown fast, focusing on SMEs in the UK and India, over 650,000 businesses now.
And Monzo, another big UK name, had some pretty strong results.
Very strong. They passed $1 billion in revenue, $1.2 billion actually, up 48%.
Wow.
And the bottom line was even more impressive, $60.5 million profit. That's a massive jump from their first profit of $13.9 million last year. Customer deposits also up 48% to $16.6 billion.
Those are solid numbers, especially as they're eyeing an IPO and expansion.
Absolutely. Their last valuation was $4.5 billion back in October 24, so this only helps. Then there was No MovePay,
Right, the SoftBank investment.
a $40 million investment, valuing them at $290 million. That's up from $200 million earlier this year. The key thing here seems to be the strategic angle it gives NomaPay access to Japan via SoftBank's payment arm.
Smart move. Scalable Capital also raised a big round.
Their biggest yet, $155 million. They've got a huge platform now, over $30 billion in assets, a million customers. They plan to use the cash to build out their platform further.
And in B2B payments, OatFi. They raised a Series A.
$24 million, led by White Star Capital. They're tackling that classic problem of payment terms, mismatched buyers wanting to pay late, suppliers needing cash flow sooner.
How are they doing that?
It's an API-first approach. They integrate right into APR systems, embedding working capital solutions. They're going after that massive, like, $35 trillion U.S. B2B payments market.
Tackling a real pain point, Banksware also got funding.
A $10 million strategic investment from UniCredit. This supports their shift to what they call a forward flow model.
Forward flow.
Yeah, basically their bank partners like UniCredit take 100% of the loans originated through Banksware's platform onto their own books.
Ah, so it frees up Banksware's capital.
Exactly. Lets them use their equity to scale faster, expand internationally, without holding the loans themselves. Pretty clever.
And finally, private equity got involved with SurePay.
Yeah, Carlyle Europe Technology Partners invested. SurePay does that payment verification software, confirmation of payee, basically. They partner with banks like Rabobank and claim really significant cuts in fraud, like 81% less impersonation scams and fewer payment errors.
That kind of track record obviously attracts investors.
Definitely.
Okay, funding covered. What about corporate moves? Mergers, expansions?
Well, Fiserv is taking full ownership of AIB Merchant Services, their joint venture in Ireland with AIB.
Buying out the rest.
Yeah, the other 49.9%, expected to close Q3. AIB will still refer customers, but Fiserv clearly wants to push AIBMS growth in Europe and accelerate their Clover POS system there.
Makes sense. And dLocal's looking at Africa.
They intend to acquire AZA Finance. AZA is strong in cross-border payments and FX in Africa, so this looks like a major play by dLocal to boost their presence and capabilities across the continent, maybe even adding things like treasury products and stablecoins.
Then there's the potential big shift with Wise.
Right, planning to move their main stock listing from London to New York.
Why the move?
They say it's to support U.S. growth, get more visibility, attract more investment there. They were valued over £11 billion when they listed in London back in 21, so it's a pretty significant potential change for a major player.
And X-Transfer. They're strengthening their EU position.
Got a payment institution license in the Netherlands, setting up a regional HQ there. Clear move to improve EU market access, boost their digital payment offerings, and integrate more locally in Europe.
Okay, lots of strategic repositioning. Before we get into the tech and partnerships, just a reminder that this deep dive is brought to you by Paycademy, helping you master the payments landscape.
Good time for it.
Right. Let's get into the nuts and bolts. Partnerships, innovations, the stuff changing how payments actually work. Huge amount happening with the big card schemes. Visa, for example.
Visa's pushing hard on AI and stablecoins, particularly in Asia Pacific. They're using AI for things like improving digital identity and authentication with partners.
And making it easier to accept payments.
Yeah, like Visa Accept in Vietnam. Let small shops take contactless directly on their phones. And with stablecoins, they're building out ways for people to actually spend them at Visa merchants, working with partners in places like Singapore. They've already settled over $225 million in stablecoin volume.
Wow. They also linked up with some BNPL-type players. Klarna and Zilch.
Yes, really interesting moves. The Klarna debit card is being trialed in the U.S. It lets you use Klarna services, like Pay in 4, but on a physical Visa card.
Anywhere Visa is accepted.
Exactly. It taps into that group who want flexibility, but maybe aren't keen on traditional credit cards.
And the Zilch partnership.
Zilch is launching its first physical card with Visa coming in September. This gives them instant access to Visa's massive global network, 150 million merchants. Big step for their expansion, especially reaching customers who, well, still like having a physical card.
It's funny how physical cards persist, isn't it?
Yeah, there was a poll mentioned in the sources. 66% of UK shoppers carry a physical card daily, often just as a backup, phone battery dies or whatever. Even 52% of Gen Z do.
So the plastic isn't dead yet. What about MasterCard? What were they up to?
MasterCard's hitting milestones with tokenization. 49% of e-commerce transactions tokenized in Europe in just 1 year. They're aiming for 100% by 2030.
Ambitious.
And they're rolling out biometric payment passkeys with partners too, try to smooth out that checkout process, reduce friction, boost approvals
They also teamed up with PayPal.
on something called Mastercard One Credential. The idea is to give shoppers more choice at checkout: debit, installments, prepaid, credit, all through one single kind of unified credential, driven by demand for customization, especially from younger users like Gen Z.
And an accessibility initiative, too.
Yes, the Mastercard Touch Card launched in Canada. It has tactile notches, little bumps to help users with sight long easily tell their cards apart, makes payments more independent and secure for them.
Great initiative. Okay, let's shift to open banking and account-to-account, or A2A payments. Visa's playing here, too.
Yes, their Pay by Bank A2A solution is now fully live in the UK. It lets customers pay bills, subscriptions directly from their bank account, but with card-like protections.
And for businesses.
They get real-time settlement through the faster payment system, better data, more visibility. Visa's pushing it for bill pay now, planning e-commerce expansion later. It's an open model, so banks and partners can join in.
Trustly is also big in this space, right?
Very. They partnered with Point and Pay to use A2A for government payments in the U.S., using open banking for easier sign-on, real-time checks on accounts and funds.
Supposedly improves success rates versus older methods.
That's the claim. They also highlight their security tech. And another Trustly partnership with the Swedish postcode lottery, using A2A for smoother direct debit signups. Similar use case, but shows the breadth.
We also saw a big bank investing directly in the infrastructure.
HSBC invested in Token.io. They actually already use Token.io to power their own open payment service.
Deepening the partnership.
Exactly. Helps Token.io grow and pushes that shared goal of making Pay by Bank mainstream for things like P2P, loan repayments, funding accounts.
And Deutsche Bank teamed up with MasterCard on open banking.
Yeah, focusing on Europe. They want to enhance DB's merchant solutions, especially Request to Pay, R2P, using Mastercard's open banking network for real-time A2A payments.
And speaking of European initiatives, Revolut jumped aboard EPI.
Big news. Revolut is joining the European Payments Initiative. They'll integrate Wero, UPI's A2A wallet, into the Revolut app for users in Germany, Belgium, France initially.
Offering what exactly?
Instant, free peer-to-peer transfers using just a phone number, email, or QR code. It's a major boost for Wero as it tries to build a real European alternative to the global giants.
And Wero has broader ambitions.
Definitely. E-commerce later this year, in-store payments from 2026. Other big players like Worldline are also rolling out Wero support, building that network across Europe.
Okay, let's pivot to crypto, stablecoins, and Web3 payments. Still a lot of activity there.
Sure is. RedUdPay, a crypto payments firm, partnered with Circle in Brazil.
What does that allow?
Lets RedUdPay users send crypto that gets automatically converted into Brazilian reais and deposited into local bank accounts. Aims to cut cross-border costs, improve inclusion, builds on the recent funding in CryptoCard.
BitJet Wallet integrated Solana Pay.
Right. For instant crypto payments using QR codes. Supports stablecoins like USDC and other Solana tokens. Part of making crypto more usable for actual commerce. They're also embedding merchant networks for potential offline use too.
BVMK is using stablecoins for merchants.
Partnering with Lion Global. Merchants in over 100 markets can accept stablecoins. BVNK converts them to USD automatically, and Lion handles the routing. Faster cross-border settlement.
And Kraken picked a European instant payment partner.
They chose Ivy. Ivy provides instant bank payments via SEPA Instant, makes deposits and buying crypto easier for Kraken users, and importantly, helps with reconciliation and MiCAR compliance in Europe.
Traditional finance is also looking closely at stablecoins, specifically Euro stablecoins.
Definitely. BCB Markets partnered with Sojin's Forge unit to make EUR convertible, or EURCV, more accessible.
That's Sojin's Euro stablecoin.
Yes, and it's MiCA compliant. It's seen as a key European alternative to USD stablecoins. There's talk it could cut remittance costs, especially from Europe to emerging markets, by potentially up to 80%.
80%, that would be huge. Any Web3 innovations?
Franklin launched something called Bankless Payroll. It uses smart contracts for small businesses to automate salaries, taxes, benefits on-chain.
On-chain payroll.
Yeah. Offers global reach, speed, lower fees potentially.
Yeah.
Could be really useful in underbanked regions or places with high inflation.
And Hong Kong seems to be leaning further into crypto.
Reports suggest they're moving towards allowing institutional investors to trade crypto derivatives. It signals growing comfort, and they're apparently educating finance firms on how to handle these complex products.
Okay, fascinating developments across the board there. Let's quickly cover the intersection of AI, technology, and fraud prevention.
AI is popping up everywhere. Griffin, for instance, is beta testing something called a Machine Client Protocol Server,
A what now?
MCP server. It's basically designed for AI agents, actual software agents, to do banking tasks programmatically.
Like AI opening accounts, sending payments.
Yeah, in a controlled sandbox for now. The idea is to build infrastructure for AI to interact directly with banking APIs safely, rather than just mimicking human clicks on a website. Building for an AI-driven future.
Stripe's also doubling down on AI for fraud, right?
Big time. They announced they're using a new foundation model trained specifically on payments data. It catches subtle fraud signals others miss. They claim it boosted their detection rate for complex card testing attacks from 59% up to 97%.
97%. That's a massive improvement.
Shows the power of tailored AI. And traditional players are embracing it too. Standard Chartered appointed a global head of data analytics and AI for retail and wealth. Vanguard setting up AI ethics labs with the University of Toronto.
AI even for protecting privacy on your phone.
BBVA's app has a discrete mode. It uses facial recognition if it detects more than one face looking at the screen. It hides sensitive info like balances. Smart way to stop shoulder surfing.
And international, using AI internally.
Yeah, their Alipay Gen AI cockpit. It uses LLMs to help automate internal fintech tasks, payment orchestration, compliance checks, fraud detection, handling disputes, making operations more efficient.
AI also featured in a new fleet card.
And Fuse and Electroverse launched a UK fleet card using Visa Fleet 2.0. Helps manage expenses for EV and regular fleets, and includes AI-powered fraud prevention.
Even Brazil's PIX system is getting AI-related updates.
Alongside adding automated recurring payments, Pix Automatico, they're tightening security. PIX keys will now have to match official tax records. That kind of data matching relies heavily on smart systems, often AI-driven, to spot fraud attempts using mismatched info.
So AI is really embedding itself across the entire payment lifecycle.
Absolutely. From fraud detection to operational efficiency to user experience, its role is just growing.
Okay, we have covered a lot today. From that big picture shift to fintech profitability and the push for European payment sovereignty.
Right, through all the funding rounds, the corporate reshuffles.
To that incredible wave of innovation in cards, open banking, crypto, and especially the pervasive influence of AI.
It really underscores how fast things are moving, how interconnected it all is.
So, thinking about everything we've discussed, what single development from this week really stands out to you as the most significant?
That's tough. But I think I'd point to the combination of A2A payments really maturing, with Wero getting traction, banks investing like HSBC, and the simultaneous rise of practical, regulated stablecoins like EURCV.
Ah, interesting connection.
Yeah, they feel like parallel tracks, but both pointing towards potentially more direct, efficient, maybe even more regionally controlled payment flows in the future. Less reliance on traditional intermediaries, perhaps?
That's a really insightful connection. Okay, a final thought then for you, our listener, to ponder. As AI gets more autonomous in finance and these global digital platforms keep growing, how can regulators effectively balance that push for national or regional sovereignty with a need to foster global innovation, ensure systems work together, and crucially protect consumers in this increasingly automated, complex world?
That's the multi-trillion-dollar question, isn't it? A huge challenge.
Indeed. And that's all the time we have for this deep dive. Thanks so much for joining us.
My pleasure. Always interesting.
For more deep dives and insights into payments and fintech, make sure you subscribe to the BayPay Forum YouTube channel. That's youtube.com/BayPayForum.
Catch you next time.